West Africa's investment world. This podcast is brought to you by Daba, your most comprehensive platform for investing in African stocks, bonds, and managed funds. You can download the Daba app on your favorite Google and Apple app stores. Here's some good news to kick things off. The market closed in positive territory, lifted by strong performances from several leading stocks. Let's dive right in. Market indices, a positive session. Let's begin with the key indices. The BRVM Composite, which tracks the overall market, closed at 318.59 points, rising 0.41% on the day. Since the start of the year, it has climbed 15.42%. What does this mean? It shows that the overall market remains solid, and investors who have stayed invested have already seen strong gains in their portfolios. The BRVM 30, which covers the 30 most liquid stocks, rose 0.39% to 154.80 points. On a yearly basis, it is up 11.58%. Meanwhile, the BRVM Prestige, which highlights the 10 largest companies by market capitalization, closed at 132.08 points, advancing 0.28%. Since January, it has gained 15.1%. Put simply, all the major indices ended in the green. That reflects investor confidence in the strength of listed companies and the resilience of the regional economy, even in an uncertain international environment. The top gainers. Now, let's talk about the stars of the session. Leading the pack was Safca Côte d'Ivoire, which soared 7.46% to close at 1,125 francs CFA. Since the beginning of the year, the stock has already jumped more than 70%. Safca operates in the coffee and cocoa processing industry, so it's benefiting from strong global demand for agricultural commodities. For investors, this is a clear signal. Agribusiness remains a safe haven and a driver of returns. Uniwax Côte d'Ivoire followed with a 4.23% increase to 740 francs CFA. On an annual basis, the stock is up a stunning 80.49%. Uniwax is a leader in African textiles, and it has benefited from both rising domestic demand and stronger international exposure. For anyone interested in the cultural and creative industries, Uniwax continues to shine as a growth opportunity. Next is Sucrivoire, which gained 2.95% to reach 1,220 francs CFA. Since January, it has advanced 57.42%. Once again, we see agricultural and food-linked companies standing out, supported by structural demand for sugar and related products. Bernabé Côte d'Ivoire rose 2.62% to 1,955 francs CFA. Over the past 12 months, it has nearly doubled, with growth of 83.57%. As a major distributor of construction materials, Bernabé is riding the wave of renewed infrastructure projects across the region. And rounding out the top 5, Sucrivoire Abidjan advanced 2.56% to 1,800 francs CFA. While the stock is still down 5.26% year-to-date, this rebound suggests renewed investor interest in companies tied to the air transport and logistics sector. What's striking here is that the strongest gainers come from very different industries: agribusiness, textiles, construction distribution, and airport services. That diversity shows that growth at the BRVM is not concentrated in just one sector, but spread across several key parts of the economy. The main losers. Of course, not everything was positive. Some stocks lost ground. Oragroup Togo posted the biggest decline, falling 4.20% to 1,110 francs CFA. Since January, it has dropped 10.94%. As a major regional bank, Oragroup remains a critical player, but competition and investor caution explain the recent weakness. CFAO Motors, Côte d'Ivoire dropped 2.21% to 665 francs CFA. The auto distribution sector continues to face headwinds, from high import costs to pressures on household purchasing power. Onatel Burkina Faso, the telecom operator, slipped 1.24% to 2,395 francs CFA. That said, the stock is still up slightly year-to-date. CFAO Côte d'Ivoire eased 0.84% to 590 francs CFA. However, despite this small dip, it has gained more than 31% since January. Finally, Société Ivoirienne de Banque closed down 0.82% at 4,110 francs CFA. But let's put this into perspective. Over the past 12 months, the stock has surged 35.30%, showing long-term investors remain well rewarded. The takeaway here is that today's losers were mostly concentrated in finance and automobiles, two sectors more sensitive to economic cycles. but the drops were modest and don't reverse the broader upward trend. Sectors in motion. A quick look at the sector indices adds more context. Public utilities gained 1.30%, driven mainly by Côte d'Ivoire's electricity company, CIE, which added nearly 2%. The basic consumer goods sector rose 0.52%. Essential goods remain resilient, as households prioritize necessities in times of inflation. Meanwhile, the distribution sector fell 0.76%. This shows households continue to limit discretionary spending, which weighs on companies tied to retail and trade. The bond market. Let's turn to the bond market. Although trading volumes were modest, with only 1,939 bonds exchanged for a value of 12.36 million francs CFA, several developments are worth noting. Among government bonds, Mali's 10-year issue from 2022 with a coupon of 6.20% traded at par at 10,000 francs CFA. That confirms strong investor confidence in Mali's ability to honor its commitments. In Senegal, activity centered on an 8-year bond issued in 2023 at 6.15%. Again, transactions were stable at 10,000 francs CFA, signaling remarkable consistency. For investors, such government bonds remain attractive. They offer annual yields above 6%, much higher than traditional savings products in the region. On the private side, Ecobank Côte d'Ivoire's gender bond, with a 6.50% coupon, continues to stand out. It attracts institutional investors particularly focused on ESG criteria, meaning environmental, social, and governance standards. And Petro Ivoire's 7-year bond at 6.80% traded at 10,150 francs CFA. That shows clear appetite for strong local companies with proven fundamentals. What this means for investors? So, what does all of this mean for you as an investor? First, the positive momentum in the indices proves it's still a good time to remain invested, especially in resilient sectors such as agriculture, basic consumer goods, and energy. Second, the spectacular performances of Safca, Uniwax, and Sucrivoire highlight the opportunities in companies tied to structural needs, food, textiles, and everyday consumption. Third, for those seeking stability, government bonds remain a safe option. And for those ready to take more risk, private corporate bonds such as Petro Ivoire can provide attractive returns. The key is diversification. Spread your investments across stocks and bonds, across multiple sectors. That's how you protect yourself while capturing growth opportunities. Daba Pro highlight. And remember, Daba Pro is here to help you take the next step. With Daba Pro, you get weekly stock recommendations, in-depth analysis, exclusive data, and lower transaction fees. With Daba Pro, you don't just follow the markets, you get ahead of them. That's all for today's episode. Thanks for listening to the Daba Markets Talk podcast. We'll be back tomorrow with another update. If you enjoyed this episode, please leave a rating, follow us, and share with friends. Remember, this information is for educational purposes. Always do your own research or consult with a financial advisor before making investment decisions. And download the Daba app on your app store to start investing in African stocks, bonds, and manage portfolios through your phone and find other helpful content. Until next time, keep learning and keep growing your financial knowledge.